everybody for joining us today. First, before we actually get into a little bit of a demo of Sqope Tax, I thought it'd be helpful to look at how we got here. This has been our vision at Scivantage for cost basis since I joined back in 2006. Pretty basic. Taxes are a certainty. They shouldn't be a distraction. They shouldn't be a distraction for our clients or for their clients, the investors and advisors who use the products. So our goal was to create a fluid and on-demand product that produced actionable data. That's Maxit. That's been in production for a few years. The last piece of this vision is to then make cost-based strategic, create tax-based wealth management tools to improve after-tax performance. That is Sqope Tax. We're going to take a look at that in a few minutes. Just a couple other kind of table setters on some background. This is a quote from Judge Learned Hand, a district judge from New York. I won't read the whole thing to you, but basically what he's saying, the first line is the important one. Anyone may arrange his affairs so that his taxes shall be as low as possible. So not illegal, unethical, or unpatriotic. He's acknowledging that this is something that he's obviously not talking about investment taxes, but in general, citizens should have the ability to manage their tax liabilities, and that's essentially what we're doing with Sqope Tax. So what is Sqope Tax? It is a combination of analytics and tools that helps investors and advisors make better investment decisions. It has the ability to increase after-tax performance. That's very important. That's key to the product. We'll talk about that in more detail as well. It integrates easily with any website. So although we have all the interfaces, which we'll look at, we anticipate that most clients of Sqope Tax will integrate in existing websites using web services that we provide. We offer both passive and active tools. The passive tools are essentially lot relief methods that investors can default their portfolios to. Typically, the default method for investors is FIFO, just simply first in, first out. It's not tax efficient. There are a number of tax efficient lot relief methods that we offer. And that's a great way for investors to at least start to begin, and advisors, start to begin to manage the tax liabilities of their investment activity without really thinking about it day to day. They could just set a default, and for the most part, it'll make portfolios more tax efficient. Then there are also active tools, and that's what we'll look at today. This is a series of tools. Some of them are year-end tools. The most common tactic for tax management of portfolios is tax loss harvesting. Most people are familiar with that. That's a year-end tactic. There are other year-end tactics, and there are some tactics to be used throughout the year. And these can be used in conjunction with the passive methods that I mentioned. There's a pre-trade what-if tool. This is a great tool. So before an investor places a trade, they can actually see the potential tax impact of that trade, as well as some potential alternatives for other tax lots. There are benefits, clear benefits to both the client, the firm, and advisors. We'll talk about that at the very end. Real quickly before we dive into the demo, what Sqope is not, it is not tax advice. We're very cognizant of the concerns that brokers have around tax advice. Certainly today is a little bit different than it was 5 years ago, because 5 years ago, any kind of question around cost basis would have received a response, consult a tax advisor, and of course now brokers are the ones providing the cost basis. So this is essentially using that same data, applying some analysis, and helping investors minimize their taxes. The decisions are left up to the investors. And this is not a tool for selecting tax advantage products. So we're concerned with the trading activity within a portfolio, not necessarily the products themselves, munis or other tax advantage products. All right. This is, my screen hasn't refreshed. Bear with me for 1 second. All right. Here are the fundamental concepts behind Sqope Tax. Money in the pocket matters more than pre-tax gain loss. So great P&L, great short-term gains and losses are great for bragging in the gym. But if you're paying a high tax rate on a win, on a gain, 39%, perhaps, the after-tax isn't quite as exciting, and that's really what matters, how much money the investor keeps after they've paid their taxes. A short-term gain can result in more than twice the tax hit compared to a long-term gain. So if investors in the tax bracket where the short-term rate is 33%, their long-term rate's only 15, less than half. High net worth clients, 39% for short-term, 15 or 20 for long-term. So there's a significant difference in the tax rate between short and long-term gains and losses, and we want to take full advantage of that. For some taxpayers, this may even be the difference between paying 15% and paying nothing for an individual trade. Another sort of cornerstone to Sqope Tax is that it's better to pay tax tomorrow than today. So if you can defer tax liability for any amount of time, particularly one tax year to the next, that money could be reinvested rather than paying the IRS. And all of this is to say that poor tax management directly translates to poor after-tax investment performance. All right, and so this is, I alluded to this a minute ago, these are the tax brackets, and you can see the rates. The shaded area there is your mass affluent. For the most part, it's just about 2x the short-term rate versus the long-term capital gains rate. And then down at the bottom, there's your wealthy client, your high net worth client is paying 40% versus 20% for long-term. So very significant. All right. So let me just jump over to demo. This is our investor dashboard for Sqope Tax. So this would be integrated within an existing portal. This is sort of the default page, a landing page where an investor can come and, where do we go? Can start their evaluation of their portfolio. Across the top there, quick summary of what's happened in this portfolio. So this investor currently has a tax liability for 2016 of $8,700. There are potential tax savings from open that are embedded in open positions of over $5,000, and that's part of what we want to draw out of a portfolio. And then the tax savings year to date, about $800. So it's the investor, whether intentionally or not, has managed to make some tax smart trading decisions. Perhaps they could be doing better. As I said, there's $5,000 worth of potential savings embedded in the portfolio. By the way, if I just want to pop up to the settings for a second. Everything in Sqope Tax is driven from a combination of things. Trading activity within the portfolio, as well as multiple portfolios, so we can do householding, which we'll look at in a minute. And then the specific situation of the taxpayer, or the investor. So we need to know the tax bracket for the investor. And this is typically self-selected. We could take this information from a firm, but most likely the firms, firms don't have this information for their entire client base. So the client can enter this information. It's carried through all of our analysis. They can enter a loss carryover from a previous year. Their lot relief method is reflected in here as well. In addition, the other lot relief methods that we support are defined, so an investor can understand the differences between and advantages between each of the lot relief methods. And then filing state, of course, is important for state taxes. So we take these rates, the personal tax situation for the investor with the trading activity, and we come up with the analysis. And we can dive right into the portfolio to see more of this. As I mentioned, we do householding. So here's this investor has 2 taxable accounts, the top 2, and then we also have a tax-deferred account on the bottom. We're going to look at the first portfolio, and there are a number of things going on in here within this single portfolio. You see the current gain-loss for the year, as well as the short-term gain-loss projected tax on that activity. Over here on the left, you see tax alerts, and these are alerts that are happening throughout the year. And the investor can be notified of this activity, whether it's an opportunity to take a loss to offset gains, warnings about wash sales, the possibility of trading into a wash sale either through a buy or a sell, a reminder that FIFO, in this case, the portfolio is defaulted to FIFO, and again, that's not a tax-efficient lot relief method, so they would periodically get reminders to consider alternatives. And if they don't want to get that reminder, they can uncheck the alert, and they'll continue to receive the other alerts. From here, they can take action on specific opportunities within the portfolio. There are a number of ways to get there. We'll look at them a little bit later on. In this case, you can see, though, that there's an opportunity to harvest an IBM loss. Again, a reminder of the lot relief method, etc. As we continue to go down on the dashboard, we can see an assessment of the portfolios and their after-tax performance. We have something called tax drag, which is essentially your effective tax rate for the trading activity. This investor is at 28%. That suggests they're doing a lot of short-term trading. We have a feature that compares an investor's tax drag to peer investors. That's based primarily on tax brackets and trading styles, and so and it's anonymous. So in this case, the investor can see that they're at 28%, their peers are at 22%, so there's some room for improvement there. Optimally, they might be able to get to zero. In fact, in some cases, they could take a net loss of $3,000. So they could actually do better than zero. But this scale is going from 0 to 33, and they're at the high end. So again, they're doing some short-term activity, and maybe they shouldn't be doing as much short-term trading activity. An assessment of some of the other things going on in the portfolio. There's some disallowed losses in the portfolio, and that's from wash sales. We'll look at that again a little bit further down this page. The second bullet actually talks about what we were just referencing with the tax drag. So this investor is frequently closing short-term gains when there are long-term gains available. That results in higher taxes, a higher tax rate. So there's an education component to Sqope Tax that's kind of blended in with the analysis. As we go further down the tax dashboard, the Sqope Tax dashboard, we're looking at some charting here. This is running total of that tax drag throughout the year. This investor started out pretty good. They were down at the low end between 10 and 20, and then there was a flurry, I suspect, of short-term trading here, which drove the effective tax rate up. So we're tracking that over time as well. And then we get into the tax reports. The first two we're going to look at here are wash sales and wash buys. So these are reports that identify those trades, either buys or sells, that would trigger a wash sale. And again, this is the concept that you want to take some losses to reduce the tax impact. Investors always think, their mindset is always gains are good, and they are, obviously, from a performance standpoint. But when it comes to tax management, losses are very good. And so when a loss is deferred due to a wash sale, that effectively dries up the tax liability. And so to the degree they can be avoided, investors should try to do so, not putting priority over investment decisions, but in many cases, an investor could be looking at delaying a buy or a sell decision just a few days and avoiding that wash sale. So this first tab has wash sales. These are sells that, if placed, a sell against either of these Apple tax lots would trigger a wash sale. And so we identify the amount of the loss at risk. The first lot has about a $9,000 lot at risk, which translates to a tax impact, a negative tax impact if it's disallowed, of $2,500. So some real money. And then the second lot, likewise, also has about $6,000 in losses that would be at risk if this trade was placed today. Right in the center, though, is very valuable information. So in 8 days for the first lot and 9 days for the second lot, that wash sale window will close. And the wash sale is 30 days either side of a loss. So this investor may be okay with waiting 8 days to sell Apple, and if they are, they can avoid that wash sale. So we provide all the information. The investor can choose to act on it or not. Conversely, there are also trades that would trigger a wash sale on the buy side. So in this case, if the investor were to purchase CRM, Salesforce.com, they would trigger a wash sale. So they have taken a loss on Salesforce within the last 30 days. Actually, 29 days ago, there's 1 day left in the wash sale window. It's a pretty significant loss of $23,000 with a heavy tax impact. That's $6,000 effective increase in their tax liability if they were to buy this today. Now, they only have to wait 1 day, so unless they think there's going to be significant movement on Salesforce in the next day, they're probably better off just waiting that day and avoiding the wash sale entirely. But if this were, instead of 1 day, if this were 29 days, and they wanted exposure to, they wanted the exposure to CRM, but they want to avoid the wash sale, well, instead of buying Salesforce, which again would trigger a wash sale, they could buy a peer stock. If they were just interested in the market segment, they could look at a peer, and we offer that to the investor as well. So in this case, they can pop this little window open. It'll show potential peer replacement securities for Salesforce. It's Oracle, Microsoft, IBM. There's some basic fundamental data for each of those options, including market cap, PE, and risk, and they could trade right from here if they wanted to do so. Or they say, no, I am really not interested in the market segment. I'm interested in the Salesforce. They can come back here and go ahead and place a trade if they wanted to. We also have a number of additional tax reports, which we'll jump into. I'm going to start with tax loss harvesting. This is the tactic that most investors and their advisors are familiar with, and this is taking losses at year-end to offset gains that have incurred throughout the year. What we've done here is presented those tax lots in the portfolio that present the best opportunity for tax loss harvesting. They have the best impact on the tax situation for the investor. So we're really looking at the gains and losses, losses being good, short-term losses being the best. Again, from a tax perspective, that's what we're looking for. So we've bubbled up all of the short-term losses first, followed by the long-term losses. We're not interested in tax loss harvesting. We're not interested in anything that has a gain. So we would have the investor can see all this information. They can see the short-term gain loss, the estimated tax impact from every trade, as well as again the days till long-term, and that's pretty significant. That's an important number in a lot of cases as we look to take advantage of securities being depending on whether they have a gain or a loss, short-term or long-term, and that's where some of the other tools come in. Gain aging, for instance, is looking at tax lots that have a gain and they're short-term. And the idea being that you'd rather, all things being equal, you'd rather sell a gain long-term at the lower capital gain rate than selling it short-term. So again, the days till long-term number here is important because if it's 182, you're probably not going to wait it out. But if it's only 7, the investor may wait 7 days and take that gain at the lower tax rate. Loss capture is just the opposite. So these are large embedded losses, and again, losses are more valuable short-term. They offset short-term gains, so there might be some opportunities for the investor to lock in a loss short-term. That sounds kind of funny, lock in a loss, but if you can get that loss, if you're not interested in holding security long-term, then from a tax standpoint, it would make sense to take the loss short-term before it becomes long-term. And then tax deferral is similar to tax loss harvesting in that it's a year-end tool. Real basic concept, but you'd be surprised how frequently investors aren't thinking about this. Tax deferral is simply looking for tax lots with large gains, and the idea being if you take that gain in December, you're going to be paying taxes on that within a couple months. And if you just simply wait till the beginning of January, you've postponed the tax payment for a full year. Effectively, the investor would have the ability to reinvest that tax liability for a year rather than pay the IRS. So there are certain opportunities to do that as well. Gifting is identifying those tax lots that are most favorable to gift. the tax impact is most beneficial to the investor who is who's doing the gifting. So that's something they would use periodically if they were making gifts. I'm going to jump back to the dashboard because I want to show two other tools that we think are pretty powerful. One is goal funding, and this is a tool that an investor would use when they have a significant expense coming up. They're buying a house, they're sending a kid to school, they need bail money, they're buying a car. We don't judge. Whatever they're doing is fine, but we're going to help them minimize their taxes as they take money out of their portfolio. So in this case, we're looking for $50,000 and come in here and I can generate a series of possible transactions to raise $50,000, and again with an eye on minimizing the tax impact. So in this case, Sqope Tax identified 2 tax lots, both in Apple. The proceeds, as desired, are about $50,000, a little bit over, $50,902. And the key to this is they're getting their $50,000 they need for whatever purpose, but the tax impact is very positive because these are both losses. They're both short-term losses. So in placing these trades to raise the $50,000, they are in fact lowering their tax liability. They can offset gains if they have them. If they don't have them, they're going to be able to take a $3,000 net loss on the year, and then they can roll the remainder over year to year. So this is a very attractive trade from a tax standpoint and achieves their goal of raising $50,000. If they are emotionally attached to Apple, or they just simply believe that's the stock they want to hold on to, they could remove Apple from this analysis and reprocess and come up with other trades. The results, the analysis being the same, we'd still be looking for those tax lots other than Apple that would have the best impact from a tax standpoint. Another thing that Sqope offers, and this is something a lot of folks are interested in, is pre-trade analysis. So an investor or advisor can test the trade prior to placing the trade and see the tax impact of that trade, the potential gain or loss characterized as short-term or long-term, the tax impact of that trade, as well as whether there's a wash sale, if that trade would generate a wash sale. If so, how much would be deferred, and how long would the window be until that deferral can be avoided. What's nice about the Sqope Tax What If, though, is it will also look at we'll look throughout the portfolio for other tax lots in the same security to see if possibly there are better trades from the tax standpoint. So if we want to jump in here and look at Apple, you can see we have 5 tax lots of Apple. And I may just be going to want to trade, place a trade of 500 shares. Now remember, this portfolio is set to FIFO. So I could override it at this point, using Sqope Tax tools and use a different method, but for now we're just going to leave it at FIFO so that it's going to place first in, first out. If this trade is placed, it would sell the oldest 500 shares first. Now, we have the Sqope Tax What If analysis can be deployed in different ways, because for an active trader, this isn't something they want to see, and you certainly don't want to slow down their trading workflow. So this is probably something that would be optional through a checkbox or another method. It wouldn't be part of the default trade ticket, but for an investor that wants to do the analysis prior to placing the trade, they'd have the option of doing so. So we can go in and look at what would happen if we place this trade of 500 shares of Apple. So at the top, we see the original trade. This is, again, using FIFO, which is the default method for this portfolio. It would select the oldest tax lot, purchased back in 2012, which would generate a gain. So there's obviously a tax impact there from a $4,000 gain. There are 5 tax lots of Apple in the portfolio. Maxit is looking at the other tax lots as well, and so below the original selection, you see the Sqope Tax potential alternative. And these are 2 lots that each have losses. The first lot, if you're selling 500 shares, you'd be selling 300 from the first, 200 from the second lot, 200 out of 250. And these are the resulting losses from those trades. Remember, losses are good from a tax standpoint. So this is better than selling the gains. Unfortunately, these have disallowed losses. So it's not optimal. Optimal would be selling a loss, a short-term loss without the wash sale. But even with the wash sale, this is more attractive than selling the lot with the gain. We've also provided to the investor a reminder of how long until that wash sale closes for these two tax lots. So again, if the investor simply wants to place a trade at 500 today, they should do so. They shouldn't be thinking about waiting out the wash sale window. But if they're thinking anytime in the next 2 weeks they might want to sell Apple, well, they might want to wait 8 days for the first lot or 9 days for the second lot, because then they can avoid that wash sale and take the full amount of that loss, which again be applied to offset short-term gains or rolled over year to year. This is the investor dashboard, which I mentioned earlier. There's an advisor dashboard as well. Essentially what we're doing there is rolling up all of the individual accounts to present opportunities to the advisor in a more meaningful manner. Once they drill into an individual's account, though, they would be looking essentially at the same dashboard the investor sees with householding or on an individual basis. I'm going to jump back quickly to the presentation portion, because a couple other things that I wanted to talk about Sqope Tax. One second. All right. These are the strategic drivers behind Sqope Tax. For the self-directed investor, we're offering intuitive value-added tools to strengthen the relationships between them, their advisor, their brokerage. The goal here, of course, is to increase after-tax performance, and I can't stress that enough, because I don't think that's commonly, the after-tax piece is commonly overlooked in investment decisions. So any opportunity we have, and maybe there are only a handful each year, but any opportunity to take a sell or a buy with a more favorable tax impact is going to lead to improvements in after-tax performance, which are cumulative just like anything else, and over time this can yield significant results. For the advisor, it does a number of things. So it counters the tax-efficient component that robos are providing around tax loss harvesting. It actually does a lot more, because the robos they're limited in what they can do in terms of tax loss harvesting. So in terms of tax efficiency, tax management, they basically do tax loss harvesting. That's pretty much it. But there are a number of different things that could be done throughout the year in terms of lot selection that the robos aren't able to offer. So this gives advisors yet another tool in that fight. It also creates robust client touchpoints. So these are great, provides great opportunities for an advisor to reach out to a client, even in a down market. If the market's getting pounded, everyone's impacted, but that can actually produce some opportunities for the investor to take some losses and take advantage of the down market. So that's a positive reason. Obviously, a bear market, no one wants to see a bear market, but a market that dips quickly presents opportunities, and the advisor can connect with the investor to discuss those. We also support rebalancing tests. So any rebalancing product that is generating a series of trades, we can run those trades through Sqope Tax and again identify the tax impact of each of those trades, as well as potential alternative trades for each of the trades in the rebalancing. For firms, we minimize tax outflows. So there's a negative impact to investors when they make trades at higher tax rates. End of the year, that translates to higher tax bills. And unfortunately, a lot of investors are going to pay their tax bills by drawing money out of their brokerage account. So it leads to an outflow, in the cumulative sense, can be fairly meaningful, an outflow of assets at year end. And so anything that can be done to help the investor ultimately ends up helping the firm as well minimize those outflows. That also encourages asset gathering. So these tools we do householding. We can also do outside accounts, but ideally, the tools work best when the activity happens within the broker that's using Sqope Tax. So it's an advantage for that firm, and we believe it's going to help attract additional assets. For those firms who still are concerned or still see commissions as a meaningful revenue component, it also generates that trading activity. So all that tax loss harvesting, all the short-term gain captures, that results in additional trading activity. I mentioned it creates opportunities for advisor touch points even in down markets, and it offers unique value-added service. First of its kind. We're happy to say that we're the first ones here, and we believe this is a real differentiator. All right, I'm actually a little bit ahead of time, so I'd be happy to open this up for some Q&A if we have some questions.
Cam, there are some questions that came in.
Yeah, okay, yeah, I see that. I'm just going to remind people, if you do have questions, you can use the GoToWebinar control panel to submit a question. The first one, is, how can I integrate this product into my current online solution? So I mentioned that earlier. We do, even though we provide all the interfaces, and the firms can use those interfaces and embed them in the existing portal. We expect that most firms will opt for web services that way. A lot of the sort of the portfolio views exist in a different format on sites today, and so rather than create another portfolio view, you could integrate certain components from Sqope Tax, wash sale alerts, tax loss harvesting opportunities, tax alerts in general, could easily be integrated into an existing portfolio. So there are a number of ways it can be done, either using our screens or with our web services. I have a question about the goal funding. So can the goal funding be analyzed across multiple accounts at once, or does the user need to go account by account? That's an interesting question. So either way. So in some cases, an investor has multiple portfolios which are not for specific purposes, and they may want to look across portfolios. And so you can do the goal funding across multiple portfolios. In other cases, the investor has structured their portfolios for specific purposes, education account or something, vacation house account. And in that case, they might want to look solely within one portfolio. And the tool has the flexibility to do either. Do I have to be a Scivantage client to use Sqope Tax? I think was what they meant to say. Currently, this works on top of Maxis. So Maxis clients can use this out of the box immediately. It will be available we have a platform agnostic version, which will be available toward the end of the year, and that will work off of any cost basis data. The rules are all the same within Sqope Tax. It's really just mapping the data, consuming the data from a third-party engine into whether it's another vendor or in-house, consuming that data within Sqope Tax. And again, that will be available by the end of the year. This is an interesting one. Can clients manage their investment taxes when they do their tax preparation? So I'm assuming this is asking about the February, March, April timeframe when they're sitting down with their tax account. And the answer is no. Actually, you can't, and I think a lot of investors still think they can, but investors have to identify the tax law, which is essentially what we're doing a lot of time. When we're choosing, the Apple examples I showed earlier, when we're looking at selecting an alternative lot, you're essentially picking tax lots, and that has to be done either before, at the time of trade, or before settlement. So there's a very small window, and it has to be done at that time. It can't be done at year end. So that's why it's so important to have these tools and have them easy to use, because you have to make these decisions fairly quickly or fairly right about the time of the trade. So it can't be done at year end. Now, here's a good question. Is this tax analysis geared towards stocks, ETFs, mutual funds, or is it also equipped to deal with trades in FX, futures, and commodities? So the tax rules are different for commodities than they are for securities, but we do factor that in. So this portfolio didn't happen to have any commodities. Actually, we didn't look at any options or fixed income either, but Sqope Tax does do analysis on all of those products. It's somewhat different. The rules are different for equities and for commodities. Sorry. But there is still a tax impact that we want the investor to be aware of. So yeah, we do all of those securities as well. Do you show individual tax lots or always roll up the lots into gains? Yeah. So I think at one point we were looking at. I'm sorry, I finished reading the question. Do you show individual tax lots or always roll up the lots into gains and losses? If you show individual tax lots, can users select individual lots for sale? Absolutely. That's an important part of the tax management. We did look at the Apple on the holdings page. We looked at Apple and we expanded from the defaults to the position view, so it rolls up all the tax lots and shows the total position of Apple in this case. But you can drill into the position and it'll show all the underlying tax lots. And for savvy investors, that's what they would trade off. They would pick specific tax lots based on the tax impact and avoiding wash sales. So absolutely, yes, investor can definitely see that, and frankly, they should be more aware of that as they're making their trades. Sorry, I'm waiting through to see if I answered all the questions. Here's one about automating. Do you provide any type of automated scheduled tax harvesting option? No, we don't currently, and part of that is we don't place trades for investors. Again, we're not giving advice. We don't place trades. The closest we come to we could, but we don't. We have the ability to, but we don't do that. What we do offer though are the automated lot relief methods. That's about as close as we come to the automated trading component. These aren't managed accounts. If they were, then yes, we could do that. But for a self-directed investor, we don't. We wouldn't want to be doing trades on their behalf. We have a few more minutes, so if I'll just look to see if there are any more questions. Another question about integration. Can I customize the screen configurations? Yes, although I think rather than re-customize or customize our screens, that can be done. This is all built off of web services. We consume the same web services that clients would have, and just kind of thinking out loud, it would seem that there's probably a better opportunity to use certain components of Sqope Tax via web services into existing pages of a broker's website. But if there was, and perhaps there are specific tools within Sqope Tax which don't really lend themselves to that approach, so maybe like the What If tool, maybe goal funding. So in that case, you could do both. You could use web services for the portfolio views, just pulling in those data elements that needed to be added to the existing portfolio views, and separately bring in an entire view of goal funding or what if. So there's a lot of flexibility into how that can be integrated. I think I got half a question here. Maybe I'm reading them out of order, but I see a question about 8949s. We do produce 8949s. The question says or forms 8949, so I'm trying to find the other half of that question. does the system, okay, that's kind of anticipated this. Does the system capture the transaction information so that a Schedule D can be automatically populated? Yes, it does. So that's something that's available as well, although that's more on the reporting side and not as much about tax management itself. Here's an interesting question, because this is where it really starts to can get messy. The sale of a lot could potentially wash against multiple purchases within a 40-day window. Does the days remaining calculation report the maximum number, or is the lot subdivided into multiple lots? So running on Maxit, we can see the sublots, and so we have the ability to distinguish the holding period for each of the sublot components. If we're using third-party data, we're kind of limited, or at least we're at the mercy of what's available to us, and we may not have as much visibility into the sublot structure. So we would be showing the longest term until the wash sale closes, just to take a conservative approach to make sure that we are actually exiting the wash sale window. I think that's about it for questions. Yeah, I think I got. Hopefully I addressed all of the questions. I think I did. If I missed anybody, I apologize. But would strongly encourage that you get in touch with us if you'd like more information about Sqope Tax, about how it works, or if you had questions that I wasn't able to get to today. Here's our website, as well as some contact information via email or by phone. And on behalf of all of Scivantage, I really want to thank everybody for joining us today to talk about Sqope Tax.